Everyone, and welcome back to our second day here at FreightWaves Live at Home. For those of you that haven't been watching FreightWaves Live TV at this point, welcome to On the Spot, the show where we break down what's happening in this week in the spot market. So with me as always, John Paul Hampstead, our Director of Passport Research here at FreightWaves. I'm Zach Strickland, the Director of Freight Market Intelligence. And today we're going to talk about whether or not we're seeing a V-shape or a more U-shaped recovery pattern in the market today. So, JP, welcome.
Hey, thanks for having me, Zach. It's a pleasure to be back in the office and to get a chance to share with our audience of FreightWaves Live at home. What we're seeing in the spot market right now is that volumes are, kind of as we predicted a month ago, sort of slowly grinding upward. They've been flat the past couple days, but over the past 2 weeks, we've seen just kind of inching upward as some businesses begin to resume activities, as local and state governments start lifting work and movement restrictions. Now, that hasn't meaningfully tightened capacity, especially for dry van. So tender rejections as a percentage of all contracted truckloads are still, around 2.5%, 2.6%. And overall, on a national basis, spot rates are still, really low and have gone down, although we're starting to see some signs where that could change. Zach, you want to talk about a few of those lanes where we might see at least some bottoming, if not significant upticks in spot rates?
Yeah, the lanes that we normally are watching are kind of the bigger lanes. The Ontario's, Los Angeles markets, Atlanta, Philadelphia, Allentown, Pennsylvania, Chicago. These are going to be our key markets to watch because that's where a lot of the volume, a lot of the freight market, either goes into or comes out of. These are hub central for a lot of carriers, so there's a lot of shippers around these areas, DCs, etc. And right now we're watching really a floor being formed around these markets in terms of capacity. Now, when we're talking about capacity, we reference the tender rejection rate a lot because that's basically the end result of supply-demand. Supply and demand both have an equal presence in measuring capacity. And right now, we watch demand really fall off a cliff, and it's starting to slowly pick back up. We've increased back to roughly 7% down year-over-year volume levels, which is it's still not close to where it was this time last year. And of course, those of you that remember the freight market last year, May was a tremendously depressing month for a lot of carriers out there.
And on a year-over-year basis, where did we bottom? I think it was around negative 14%. Is that right?
We're roughly about 15% down year over year, right around Easter. So Good Friday, again, had a deepening impact. But again, that's kind of false. So it's more like a
moving holiday.
10 to 11% down year over year impact. So
we're back up negative 7%. Decent volume growth, although it seems like that may be kind of like losing some steam out of those major markets you're talking about. We haven't seen, we saw them kind of move back up to a certain level, but really struggled to continue growing, right?
Yeah, and a lot of this, these interesting nuances start to show up in the data that you pick up over time. The end of the month effect, for instance, things that you don't really think about when you're operating in the industry. End of the month, end of the day, end of the week. That's kind of your tightest times of the, when you're operating in the spot market.
Right.
These are last second orders, et cetera. Quotas have to be made, and we may have seen some semblance of that here at the end of April, even though we're in this pattern now where we can't really apply, previous experience.
Right. Right. No, that's really fascinating. Reefer, on the other hand, is still performing pretty well, especially compared to dry van and flat. So, capacity's loose, around 5%, slightly below 5%.
Yeah, we're still historically low on both the van and reefer rejection rates. Van, you mentioned, was around 2.5%. Reefer right now is sitting at about 4.7, or actually it's 4.9% today.
Okay, so just under 5%.
Yep. But that's a recovery from under about 3.7% this time last week. So we have seen a pretty decent jump in reefer rejections.
And at this point, we're well into produce season, where we've got strong reefer volumes coming out of Southern Californian markets, Florida as well. I've seen different times the cross-border markets across Texas we're doing well. Are there other places in the country where we're seeing sort of strong reefer activity?
Yeah, I mean, really, the reefer volumes are actually picking up across the United States again. It's really hard to discern. It's not all simply produce. A lot of what we track in our tender volume indexes are contract movements, and a lot of that produce freight moves on the spot market.
Right.
Because it is so inconsistent and the volumes are erratic. You can't really rely on that throughout the year, obviously. The lettuce, has about a 90 to 120 day growth cycle out there in California, so you can't. You can say, okay, every quarter you come pick up this freight, but reefers carriers can't just shut down for 90 days on end. So it's very erratic. It's very disruptive to the market in general. And what we're seeing right now, though, is nationwide tightening. And I use the word tightening a little loosely here, ironically. So it's, tightness is relative to where it was this time last week, this time 2 weeks ago, when the market basically had hit a trough. So
right.
the reefer carriers, the reefer brokers out there should be seeing some increasing upward rate pressure right now.
Yeah, and maybe it's taken them a little bit, time to cover on their sort of internal load boards and marketplaces, maybe a little bit of lengthened, maybe 15, 20 minutes instead of 7 minutes or something like that. But, one of the things I think we should talk about is whether national volumes are so low and on a national basis capacity is so loose such that, regional imbalances don't really give carriers pricing power. There's kind of two, topics I want to dive into here. One is, I think we have noticed it, at least in one example. So there were a lot of COVID-19 infections in meat processing and packing facilities for a variety of reasons. One is the close quarters that the workers are in. Another one is the fact that these facilities are refrigerated, so cold air is constantly blowing through the facility, which is actually kind of what the virus likes. And there are other things, the low levels of automation, whatever. We've seen a bunch of meat companies have to shut down their plants, after suffering hundreds of infections. Those have been kind of clustered in the Midwest. Sort of in
That's where the majority of the meat production is in the United States.
Yeah,
of course.
but we didn't see any out of North Carolina, which is a huge pork state. We didn't see any out of Northwest Arkansas, which is big in poultry.
Right.
Mostly in the Midwest, and so I'm thinking of states like Iowa, Kansas, Nebraska, Indiana, Illinois, places like that. Now we did see a kind of some underperformance in reefer rates from like Chicago to Atlanta, for
right.
example. So I kind of interpret that as sort of the weakness, the choking off of demand in that region. Kind of reducing prices for capacity, and I think I wonder how that situation is going to play out.
Yeah, it's interesting too because of the way that all the food processing works. We're talking about, of course, some of the meat processing plants specifically, but it also is applicable to the entire the cold chain itself. Right. Up there in the Midwest, you have people that now we're producing largely for schools, restaurants. That's fast food restaurants. They liquefy potatoes before they ship them out. So it's a totally different process of moving that freight versus moving the fresh poultry, the stuff that we get in the grocery store. So right. That's what we're hearing about is a lot of that type of processing has come to an end, for instance, because there's just not that demand there anymore. Right. So that's creating some issues as well. But as it pertains to these plants, we're really not seeing a lot of demand-driven tightness, in those markets. Even though that you're talking about some of those plants shutting down, you're not going to see, as much production out of those markets. The Midwest,
right?
For
That's what I was thinking. We saw spot rates out of Chicago right. go down right. relative to other lands.
Right, but it's across the board. A lot of those commissary, the Ciscos of the world that are moving right. a lot of that already produced, manufactured food that we eat from the restaurants and fast food. As gross as that may sound, it's a definitely they're having to transition into more of a fresh supply chain, which just hasn't happened yet. There's
the other thing I wanted to ask you about, Zach, is that we're well into the pandemic. We've seen how it's starting to play out, and we've been able to identify the regions where it's affected people the most, and that region, from my view at least, is the Northeast. So 4 out of the top 5 states for COVID-19 fatalities are in the Northeast. Those states are New York, New Jersey, Massachusetts, and Pennsylvania. So the other state in the top 5 is Michigan. Now, my question is, do we think that the severity of the pandemic in the Northeast will suppress economic activity such that the Northeast returns to its normal sort of, backhaul status, undesirable status for carriers, and therefore carriers regain pricing power on lanes inbound to the Northeast? Or is capacity just so loose that it's preventing carriers from getting a foothold in any lane?
Yeah, I think your second answer is the obvious one here, because you're talking about an industry or a market where we're looking at rejection rates at historical lows throughout the United States. That just simply means that carriers are going to be willing to grab up everything they can. I know that the Northeast is, of course, the traditional backhaul lane. You go into the, New York City. They don't necessarily go into the city itself. There's a lot of smaller trailers that have to go into the city because it's very difficult to operate a 53-footer up there.
And they've made it illegal to park trailers on the side of the street. Yeah.
But there's a lot of distribution centers, a lot of freight that moves, into New York, and then it goes further north. It doesn't come back south. It's very difficult to get any freight. We were looking at, the market from Philadelphia going into Charlotte, for instance. So carriers will take Charlotte itself is a backhaul market because it is very consumer oriented. There's a lot of consumption there, not a lot of production. You have to move outside of the city to really get any or outside of that market to get really any opportunities to move freight. So they're willing to take low rates, going into another backhaul market in that scenario, in order just to get south and have a better chance.
That's not a good sign. Yeah. So I think we've outlined a number of reasons why we think the past few weeks of data kind of confirms a U-shaped recovery thesis, although we haven't gotten to the sort of second the actual recovery part, right? Fairly flat. Is there anything, are there any sort of, as a final question, any factors that we need to consider kind of on the other side of the argument, any green shoots? Has Detroit started turning back on yet? Are there other places of activity in the country that may be kind of contradictory to the U-shaped recovery thesis?
Yeah, I don't think there's anything necessarily contradicting the U-shaped recovery, but I think it's more, everybody looks at a U. It's a very smooth letter. You kind of trough out and you kind of, gradually come back up. I think we're going to see more of a stair-steppy, kind of an uneven recovery, if you will. You're going to have automotive plants eventually turn back on. You're going to see a big spike. Then that's going to level out for a minute. And a lot of this, of course, depends on the demand side.
So the shape of the U is misleading because it has a sort of a vertical ascender. And so you're thinking more of a gradual, slow grind upward.
Exactly. It's going to be totally unlike what we saw with the ramp up, with all this, the panic buying. That's your V, your upside down V is what we just witnessed with the ramp up. And I think that this is going to be more of a, as people start to turn back on, you were talking about the Northeast. Those people are going to be slowly returning to their jobs, returning to employment. It's not going to happen overnight. You're going to see these real quick spikes, which I think we just saw our first one, which is good news in terms of the recovery process. We saw at least that bottom being hit for the time being, and now we're starting to see another little stair step forming right now.
Yeah, my worry about this market for the carriers and transportation providers is basically just that, is it going to be possible for them to get leverage without a strong recovery in consumer spending? I think that's unlikely, and so this recovery, I wonder whether it's going to be enough.
Yeah, no, it's going to be hard to tell, especially when these things happen. So anyway, we'll have to stay tuned. Nobody has a game plan for that, but up next, stay tuned for more demos, and here is Anthony Smith.